What's up, everybody? Pro Stock Advice community. How are you guys doing? Zach is back with another episode of You Know What Time It Is. It is Journey to $1 million. Futures are looking pretty green right now. Last time I checked, NASDAQ's up like 0.8, which is pretty nice. So hopefully some of our positions will start paying. Seems like it might be the bottom of this tech and growth dip. Why, you might ask? Because I think that the inflation fears are mostly priced in. That's what I think. Now, of course, the inflation kicks in and it could just crash the economy and everybody could lose their jobs, houses, and wives. But I don't necessarily think that would happen. And I think, for the most part, that this is going to be priced in. So hopefully we're starting off this Monday as a green day across the board. And yeah, so I'm back at it. I'll be making consistent videos and blogs this week since I took the week off kind of for the last week, and but I had some surgery, but I'm not 100%, but almost though. And thanks everybody for supporting the webinar. I just wanted to tell you guys I really appreciate all the support that everybody is giving, and we had a lot of fun, and we were learning some good things, and we have another round starting up soon. So just let me know. Head on over to prostockedvice.com /seminar and check it out. Send me a DM in YouTube, Twitter, doesn't matter, and I will respond. But nevertheless, let's take a look at this. There are four, I think, 1, 2, 3, 4, 5. Yep, 5. I want to take a look at this week. Going into this week, I want to go ahead and put on the watch list. The watch list is updated. And remember, guys, I do a weekly watch list now. Let me make sure I'm sharing this screen. Yes. All right. But anyways, so the first one I want to look at is just a broad triple Q. Just the NASDAQ ETF QQQ. And it seems like we have bounced off of this support. And this is a support that you can draw back all the way to the March dip. And I think if it continues, or sorry, to the March not last March, but the March before last, the COVID dip, which is the red line, goes all the way back there. So drawing out that support, and for the March dip, if you measure the length and the slope of both of these, and then I drag them out over here to see about where we could be, because like I said, this is hitting support right now, and it's the same support that we bounced off of the last time during March dip, which is right here. So hey, if this is all coming true, if it's all coming into fruition, then we are at the bottom and most of the fears are getting priced in, then this could be a pretty interesting bounce, could be setting up. And this is just NASDAQ in general, tech in general. It looks like it's about to bounce. Of course, Dow Jones S&P is not doing as bad as our lovely tech stocks, and growth is a different story. But this is the first one that I wanted to take a look at. But if this does come into fruition, then I think it's going to be about 3 to 4 weeks. We could see about $350, $360 levels. It just depends. And yeah, but I think that we will pop right out of this dip. And keep in mind, we are still in a parallel bull channel. And this is still very bullish, in my opinion. And then the next one that I wanted to take a look and add to the watch list is going to be Visa, ticker V. And I did the same thing here. I took a look at the supports and resistance, and also obviously we're in a bull trend right now, and I don't see any reason why that's not going to continue going into the summertime 2021. People are going to be spending money. There's going to be an increased consumer spending, and I cannot even find one analyst, like a major analyst, that is not giving a buy rating to Visa right now. So with that said, just estimating the rate of growth, assuming that the last 2 times it's going to be similar. So I took that and drew it out. We should be hitting the resistance in this bull trend in a week. No, sorry, 1 month, 1 week. More or less, something like this. 3 weeks to 5 weeks, pretty much. And that would put us right at around $240, $250 level. And I probably would say closer to the $240 because that's the resistant level. But anyways, I think that this is going to be a win-win. I would be really interested in doing some vertical spreads, possibly a couple of months out. I mean, if we're looking at about 4 to 6 weeks, something like that, then I would probably get them maybe 2 months, 3 months out. If you can afford the calls, I mean, if you can't do the vertical spreads, it's all pretty good in my opinion. And moving on. The next one is going to be XLF. This is a financial sector ETF. The financial sector has obviously done very well. This is since October. It's just been on a trajectory towards the moon pretty much. Just incredibly bullish signals that it is giving off. And if it continues on this path, I mean, there's not much that we even need to draw out here, but it's clearly on this blue line, as you can see on this chart that I drew out. And assuming that it continues, which it probably will, I think that most of the inflation worries are priced in, but I don't think that the conversation is going to go away altogether. I think it's still going to be a little bit of a tug of war. And yeah, also we're still going to keep watching the 10-year treasury yields, of course. But overall, I think that the financial sector is probably going to do the best through the summertime. But of course, tech definitely looks like it's about to come up, and if tech comes up, maybe some of these the cash will flow out of some of these cyclicals and the financial and energy, maybe into tech and growth. I mean, who knows? I mean, it was the opposite before, so now maybe it'll go back a little bit, but overall, the bull market has broadened out, so it's a good thing. But I definitely like this one. I personally would just get some common shares. I mean, you could also go with the FAS, which is the 3X financial sector bull. And if you don't like the 3X one, XLF is perfectly fine. As far as options, I'd probably go towards the end of the summer, maybe mid-summer, do around $40 or something, like $35, $40, something like that. Even a vertical spread could be interesting to save some money. And then the next one is going to be AMAT, which is Applied Materials, which is a very big semiconductor company. And it is showing extremely strong support around $120, as you can see through this chart. And this one is going to be a little bit trickier, but the last about 3 times that it came down to this support line, it has bounced. And that was since January. So it seems like this is a pretty strong support, and I am assuming that it will keep doing that. And I think most of the semiconductor shortage is over, and not necessarily the shortage, but you could say the shortage is priced in. Everybody knows that now. But although I do think that the next quarter earnings for the semiconductor companies will be a lot better, since they are going to ramp up the production. But for the most part, I think that this is all priced in, and probably we can move past all the jitters in the semiconductor sector. But it would be interesting to get around September calls, I think, towards the end of the summer for $145, $150. I mean, we're looking at this trajectory, which it was on during, March. AMAT ran up. So just assuming it does the same thing, which it won't necessarily, but it is pretty consistent in this, at least in the this blue support line. Been pretty consistent at least. And anyways, you can decide what you want to do with that one. If anything, also you could just buy the ETF SMH or SOXX, SOXL, whatever, it doesn't matter. That is totally going to be up to you. And then the last but not least is Google, which is also one of those other ones that I having a hard time finding any major analysts giving it anything other than a buy rating. But I would expect around $2,500 level in around 4 weeks, and this is assuming the same rate of growth, which it has been growing at this rate since around February, March. And Google has been running up for a while now, and they're doing a lot of interesting things in the online streaming. And with YouTube, they've made a lot of good acquisitions. And I'm a long time, also the Google Fi, I'm a long time Google customer for a lot of things. So obviously, and it's the funny thing because out of all of the FANG stocks, Google and Facebook are the two that are doing the best out of this year out of all of the FANG stocks. And the funny thing is those are the ones that are already banned in China. And those are the ones doing the best, which is kind of funny when I was thinking about it because of the Bitcoin fear, uncertainty, and doubt. circulating around Bitcoin in China and Huobi and things like that. But yeah, I mean, they're really just going to have to go ahead and ban that altogether in China, and then after they ban it, it'll probably run up to the moon. But yes, anyway, so assuming that Google does stay at the same rate, which it has been for some months now, and I don't expect anything to change. I expect it to continue. But it should put it around $2,500 in around a month. So do with it as you please. These are just my thoughts for going into this week. I have already posted these charts on Twitter, by the way, and hopefully you're already following me there. And if you're not, go ahead and hit that link in the description to get on over to the Twitter to follow me there, because we do the trades there. Every single time that I make a trade, I will post it on Twitter, at least mostly, unless it's just happening so fast and I forgot to screenshot it or something like that. But usually we post it on the Twitter. But nevertheless, and we also have the Discord link in the description. If you're looking for a broker, you can head on over to Webull. Link in the description is going to get you 2 free stocks and a chance to win Facebook, Google, a lot of big giveaways that they do. And it's the broker that I use. You don't really need anything else as far as the news feed, as far as the charting is really good there. Overall, it's a very nice broker, and I think a lot of you guys have already made the switch from Robinhood to at least something else, and I highly recommend Webull. It is what I use. But nevertheless, if you guys have any other questions, hit me up in the DMs, Twitter. Reach out to me on not Facebook, but Twitter, and on my website of what you guys would like to see, and I would be really interested to make a video or a write-up on some of the stocks that you guys are interested in. And to do maybe a 1 pick per write-up, or couple picks per week or something like that could be cool. But anyways, guys, I appreciate it once again, and I'll see you on the other side. Peace.